All right, good morning, everyone. Let's get going here. Sorry, let me just straighten this out. All right. Last night's session, we finally got some. We've continued the ping pong, I guess, going back and forth off of support and resistance levels. We're now getting back down very close to some sort of support levels on the S&P, and we've got a bit of a ascending triangle formation that's been going on there for the better part of the past 4 or 5 months. Failed at resistance within 1 point at the top. We talked about that in on Monday, or sorry, on Monday session in the States. And then yesterday was not, it wasn't pretty. I mean, there was nothing really positive to look at. I mentioned Alibaba yesterday. I showed that at 88 bucks, or sorry, at 80 bucks, there was some support there. We were coming back down to test, the bottom end of support on the lows, and if we dropped it, it was probably a real bearish signal. We did drop it. We traded down south of 78 at one point, recovered quite a bit at the end, but the bottom line is the tech space was really under pressure. Apple also under pressure. A lot of the high flyers once again yesterday coming under pressure, and I think that's a bit of a warning sign. I think we're seeing a little bit of a changing of the guard right now in terms of the leadership. We've seen a lot of asset classes starting to move aggressively again. So if you look back toward the end of last year, and when we started to see the real heavy levels of volatility come back into our market, one of the big signals of that heavy, one of the reasons why we started to get such heavy volatility is obviously we started to see moves in asset classes that were obviously standard deviations away from what the typical average moves would be in those sectors. We're starting to get it again. I mean, we've already seen well over 50% off the lows in the oil price in general. The moves in the not just the U.S. Treasury markets, but more specifically European Treasury markets. I mean, give you an example. German 10-year yields were yielding around 13 basis points only 2 weeks ago. Okay, we're at 53 basis points. When you look at the percentage moves there, they're just astronomical, and that becomes a really hard thing for the market to adjust to quickly. And so I think that in itself, those sorts of scenarios are going to present things difficult. Spike, will you tell me 7, please? Oh, sorry. They're going to present really difficult things for the market to balance out quickly. So probably looking at potential of a lot higher volatility coming in the near term. We've got the VIX, which ran really hard yesterday, up well over 11%, and potentially looking to get off the floor of that 13 level again, where it's been settling out so many times. All right. If we look at the Asian session overnight, we had Australia, which got absolutely blasted, down well over 2%. There was I think maybe the first set of alarm bells went off yesterday with their biggest bank really reporting poorly. And they've got big obstacles coming there in Australia. I mean, I've been talking about that for quite a while now, talking about they've got the most expensive housing market in the world. When you look at the price of the average house relative to the average salary earned there, if I'm not mistaken, it's getting close to 7 times the average salary earned. In the peak of the U.S. housing bubble in 2006, it was at 5. So to give you an example there, that's a shocker. And then when you factor in that how reliant they are in China and commodities, and you've seen what's happened, I think they've got really hard times ahead. So for them, that this could be really the start of something out of Australia, and that's how much impact will it have on the rest of the world, who knows? But the bottom line is I think Australia's going to struggle in the near term. Yeah, Shanghai and Hang Seng pushed higher this morning. Hang Seng reversed a little bit. I think Hang Seng now down 100 points, actually down 0.3% as we speak. And So a little bit of a reversal there. We've had 10 cent playing yo-yo this morning. I think down about 0.75% early, then went up 1%, now down a little over 0.5%. So really going back and forth quite a lot. So we got a lot to digest this morning. We're going to look real closely at a handful of different factors today. But I think we've got to watch the action. Yesterday we had a big reversal in the market toward the end of the day. It'd be interesting to see if any of that selling left over today as we go into the morning. All right, we had China HSBC composite PMI numbers that were slightly lower than prior numbers, but we had, if I'm not mistaken, I think they were better than expectations and the highest number in 4 months. We had the German market PMI numbers coming out today as well. Same thing out of the Eurozone, same thing out of the UK, and I think the same thing in the States. Maybe it's only tomorrow in the States. Then we've got mortgage apps in the States. We've got ADP employment change, and we've got crude oil inventories. All right, let's get into the maps here. The first thing that we're going to look at this morning is we're going to have another look at the German DAX. So yesterday we got a monster sell-off in the DAX. We talked about this in yesterday's session. We talked about the neckline up here of this head and shoulder formation, and how we probably have a big target. We'll see if it retests, and if it does and starts to turn, then maybe it can really fail. So we've started out the day down 90 points. We went up 145 points, and then we finished the day down to 290 points. So one of the wildest rides I think ever. Anyway, you can see there we failed to break up through the neckline and made a huge reversal, closing on the lows at the end of the day. I think that we've still got more room to come. We've still probably got a good 300 and so points, 350 points left of downside, at least in the DAX in the near term on that target. I also wanted to relook at the U.S. bond market. We keep talking about this. This is the 10-year yield that we're looking at. And you can see here 1, 2, outside of that day, 3, 4, 5, 6. So 6 out of the last 7 days we've seen yields rise. I call it actually 7 out of the last 8 days we've seen yields rise. And we've pushed, obviously, back above this 2% level, which I think is key. It's a bit of a key psychological level. We're right here at the 200-day. For me, I'm looking at 220 very closely. We're trading basically right at 219 as we speak. If I see us, getting up higher than that level at 220, I'm all of a sudden probably going to be becoming quite bearish. On equities. The interesting thing is that there's been very little that's played out, as you would have thought, against the yields that we've seen moving. So, for instance, if interest rate expectations are starting to move higher, you would think that the dollar would start to run. But actually, over the last 5 or 6 days, we've seen the dollar move lower, conversely to what yields have been doing, which is not typical. So, this is it's just something to keep an eye on. I think that the slightly weaker dollar is actually starting to play out into the Fed's hands, and I think we've got to play it accordingly. All right. The next thing we'll have a look at here is Aspen. So Aspen, I know we looked at this a lot over the past little bit, but this pattern is just so good, so convincing. We took out the recent lows here from the other day at 360. You can see there trading down nicely yesterday, down to close on the lows of the day at 352. The reason why I wanted to revisit this is simply because I think you got to be really patient here and not look to try to pick bottoms too early. I actually think that the target is way down here somewhere closer to 320. So just be careful. The picking the bottoms here could really be a dangerous game, and you've got to play it accordingly. So wait for this thing to play out maybe a little bit more. If we end up getting selling in the market, you remember, most things will fall with some selling in the market. So just keep that in mind. All right, next thing we're going to look at is Steinhoff. So Steinhoff, probably one of the biggest the widest held stocks that I can think of at the moment. It seems like so many people have had this stock and they're bullish of it for a lot of the same reasons. 75.60, definitely the level that you got to watch there. If we drop 75.60, this thing can probably come off the boil a good $2, $2.50. You know, maybe we could even get a correction all the way down to 70 for all I know. But you know, we're at least going to get a couple bucks out of it if we drop 75.60, I would think. Next one we'll look at is Sibanye. So Sibanye reported earnings 2 days ago. You can see there that was the ugly red bar that we've got. And yesterday we got below what I would say is definite support on this channel. It really looks like there could be a good $2.5, $3 of downside here potentially in Sibanye. And you know, I think the stock has run really hard. I think they're kind of moving out of the cycle of what was the hot sell to the rest of the world in terms of you know, just coming out and being a cash cow. Now they're starting to look to invest money, spend money on capex and that sort of thing. So I don't think that the market likes it so much, and the earnings obviously didn't come in to meet expectations. Okay, the one thing yesterday that we had was a huge turnaround in the mining space late in the day. I mean, every single miner across our entire board went bids through the roof, and you know, there wasn't very much volume yesterday. I think that's the one thing that leaves some doubt in my mind about that move. Obviously, there's still big short interest in a lot of the local miners, but we got certain things that are kind of starting to break out here. Kumba, we talked about it at the 180 level yesterday. We got above 180 and we closed above that. There's definitely a little bit of an inverse head and shoulder setup here in Kumba. So we could, you know, there's a very good chance to see significantly higher levels in Kumba. I know that the short interest is still massive out there, so just be careful around this one. And then the next one is Impala. So Impala's at 170 here. We basically came up here and filled the gap from where we broke, not a gap, but we came up here to test resistance from where we really broke down from. That was at 70 Rand. You know, we did get above that, and we only closed at it. I think we're going to have to see legs, you know, stretched here, you know, to get kind of north of 71 at least before you can really have a backswing on this thing. But if it gets above here, I think we could have another 10 to 12 Rand upside very quickly, maybe up to 200-day moving average around 80 in Impala. And that's it for today, guys. Good luck.